Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 6th of September, comes to you from London. And we start by looking at the dollar index. Dollar just turning weaker again, back below the cloud, turning down here. So we are just seeing that dollar weakness returning. And if we look at the euro, we're seeing the euro strength returning. So back to this longer term trends taking hold, weak dollar, stronger yen. And we're seeing that here with the yen actually dollar hitting new lows against the yen. Um, very bearish for the dollar, and we're just starting to test this support level and activate this downside target. So we are just seeing the dollar weakness just kicking in, and that's even showing up in sterling. Sterling back above the 130 level. More about dollar weakness than it is about sterling strength, because when we look at sterling against the euro, we see that we haven't moved as much, and we are down slightly this morning, even though the sterling chart is still pretty good here for short term. The medium and long term picture for sterling is still not great. And if we look at Swiss franc, we see sterling is struggling here. Against the Australian dollar, sterling just has a little bit of the upper hand this morning, looking a little bit stronger there. The S&P 500 index fell away sharply yesterday, as did the Nasdaq 100 and the Dow Jones, all falling away sharply. So we're seeing US indices really having a sell-off on the geopolitical risks with North Korea. And we see today that the futures are steady, S&P 500 future steady, and the Nasdaq also unchanged. So it just suggests we're opening flat at the moment. The FTSE 100 down a further 0.5% this morning, so looking weaker there. And the FTSE 250 also just struggling as well. So if we look at the DAX is actually just holding its slightly bullish position here, but medium term this chart is very worrying. And the Nikkei also looking worrying, that stronger yen pushing it lower, and we are just seeing the medium term chart starting to come into bearish territory as well. Hang Seng off 0.5%, so the Hong Kong market also falling away, and the Shanghai market barely unchanged, so barely changed. So we're seeing here this market holding up relatively well. Sensex down 0.4%. The Australian market also down 1/3%, and just still struggling in the doldrums there. Brent crude is up this morning. We're sitting at about 53.30, so we are seeing some strength here. The medium term, long term picture all starting to look pretty good for crude oil, and WTI much the same, just starting to come into a more bullish territory. The Natgas Henry Hub back below $3 and looking a little bit bearish. Haven't deactivated these upside targets yet, but it is just looking a little bit bearish there. Copper continues to run and still looking pretty bullish. Taking a look at gold, this was the big story yesterday, hitting the 1340 level. We see gold just looking stellar now on the long and medium term chart, and the short term chart is bullish with upside targets activated. If we look at the 60-minute chart, we see here we've got into the 1367, 1366, and then 1414. If we can get above 1375, that's a new multi-year high. That's what gold needs to do. We deactivate that downside target. So just keep an eye out for gold running further, but looking pretty bullish and holding on to the gains at the moment. The weaker dollar helping, of course. Silver also looking strong. US 10-year yields sitting at 2.07%, so falling away there with a weaker dollar. So yields just looking bearish. Outlook for US interest rates sentiment is that they won't be rising any further soon. Apple was off quite sharply yesterday, but still bullish. Google also, but holding its bullish trend. Amazon, same, holding its bullish trend. And Facebook sold off, but again holding its bullish trend. And Microsoft. So tech all selling off, but all still holding the bull trend. So it'll be interesting to see how we recover the next few days. That's it for today. Until tomorrow, happy charting. See you then.